our televised meeting, so we welcome public that's watching on TV. And we're changing our format here a little bit, so we will start with we're moving to using a consent agenda, so we'll start with a resolution 15-22 to adopt a consent agenda process. So any explanation of that?
Just need a resolution to say the board wants a consent agenda.
All right, I entertain motion second for resolution 15-22 as shown.
Move approval of resolution 1522.
Second.
Any discussion or questions? Not Angie, please call roll.
Brunkhorst,
Aye.
Frederick,
Yes.
Kettleson,
Yes.
Buckingham,
Yes.
Faber.
Yes.
Okay, we've adopted the consent agenda process. Now we will move to the agenda as presented, as modified, and entertain motion second to approve the agenda.
So moved. Second.
No discussion. All those in favor, say aye.
Aye.
Opposed? All right, move to the public forum. Anything from the public? Anything, Angie, online or no? Hearing none, we will close the public forum. We'll move to consent agenda items. Consent agenda items include the minutes from the April 12th Waverly Utilities regular meeting, the electric utility trade accounts, the communication utility trade accounts, and the electric utility financials. If there's no objection to these items will be adopted.
Move approval of the 4 items.
Second?
Second.
Any discussion, questions? Hearing none, all those in favor, say aye.
Aye.
Opposed? Consent agenda is approved.
I just add that you notice the reimbursement resolution was not included in that because it's a resolution. The bond folks said no because that's got to be a roll call vote. So that's one that we did not get put into the consent agenda. So you'll see that down below. So in case that question comes up, I answered ahead of time.
Good. Okay, we will move to the financial audit. And I think we have the auditors online here.
There you are. Okay, hold on just a sec. We got to get the microphone or the speakers.
Okay.
Good afternoon, Brad.
Good afternoon.
Can you guys hear him?
We can see you and hear you pretty well.
Okay, I'll try to speak up. Can you hear me now?
I think Angie's trying to turn you up here a little bit, so. Yep.
Okay.
Okay.
All right. Good afternoon, everybody. My name is Brad Tyson. I'm a senior manager with Idealing CPAs out of Dubuque, Iowa. And I'm here to talk about the financial audit for 2021. Probably the first thing I'll want to do is jump out and kind of talk about the governance letter. This year is a little bit different. I know I'm talking with Kelly and Daryl. We talked about this last week. There's a new section that shows up in there this year that's really got the audit industry sort of buzzing because it sort of captures your attention quite a bit. So I'll kind of dive into that first. So one thing we're required to do as part of every audit, and we've been required to do this for 20 years, sort of identify the different risks of the entity that we're auditing. What has changed for 2021 is we are required to communicate those risks to the board, to those charged with governance. And so on page 2 of that governance letter, you'll see right at the top, there's a section on those risks that we have identified. And it kind of jumps off the page because when you look at it and the bold lettering there and the different bullet points, kind of makes you think, oh my goodness, there's several risks in the entity. They have some findings to report. It is actually the exact opposite. These are sort of inputs that we take into consideration when we plan to perform the audit. So we design our audit procedures with these risks in mind. So this is not something that's new to us or new to the entity. These are risks of most entities that have an audit, and we're required to identify them on sort of the prelim end of the audit, and then sort of address them during our final procedures. So those risks, the first two are actually presumptively mandatory risks that any auditor would have to identify as part of any audit. So the first one is management override controls. So the possibility that management could, circumvent controls throughout the year. And the second one is revenue recognition. And those, like I said, those are audit risks that anyone would have to identify as long as they're performing an audit, or at least they're presumptively mandatory risks that you would identify and sort of address through your audit procedures. The last two are very specific to Waverly utilities. Debt covenants, anytime you have a debt covenant, there's a risk there to make sure that the entity is sort of, meeting the threshold of that covenant. And then capitalization, when you talk about capital assets, there's a little bit of a need for professional judgment in terms of setting a policy, setting a depreciation rate, and then also capitalizing, capital items versus repairs and maintenance also requires a little bit of judgment as well too. So for purposes of covering those risks, I guess I just want to inform you that those are sort of like inputs in our process, and then we go through and we sort of design our audit procedures. And then on the back end, we perform procedures to ensure that we've identified those risks and address them as part of the audit. So at the end of the audit, we know we've covered those risks. We know that management has designed controls. They have controls in place to identify those, or to sort of mitigate those risks as well. But I guess I just want to start off by saying that is a new required communication. But these are items that are processes that have been taking place forever. But it does kind of jump off the page when you read it because it makes it sound very significant. But again, all of those sort of areas have been addressed. But we have no further concerns over any of those areas as part of the audit. So hopefully, if you get a chance to take a look at that governance letter, you can look at that. And if you have any questions, I guess feel free to let us know at any point in time too. So other than that, I was going to jump into the financial statements. Our independent auditor's report this year, you'll notice, takes a little bit different format than in prior years. That was also a change within the auditing statements this year. So the opinion that we give on the financial statements is actually right away in the first two paragraphs. We have an unmodified or clean opinion on the financial statements this year, as we have in the past as well. So no issues there. And then our opinion further goes to explain the basis for our opinions, our responsibilities versus management's responsibilities. So management's responsible for, ensuring that generally accepted accounting principles are followed. They're responsible for internal controls of the entity in maintaining and designing controls on a day-to-day basis. We're responsible for reviewing those controls as part of an audit to plan our audit procedures. So we review those from somewhat of a high level just to kind of make sure that we can identify risks and then plan our audit procedures or tailor our audit procedures further to address those items. So that's on, I think our opinion starts on page 1 and goes through page 4. And then you get into management's discussion and analysis on page 4. And I always like to say that if you're going to read one part of the audit report, read the management's discussion and analysis. It gives an excellent year-over-year analysis of the changes of the electric and communications utilities. It kind of talks about the significant capital asset changes, long-term debt changes. It talks about the income statement and just the general overall sort of direction of both utilities. And since our audit opinion and the financial statements are both over fiscal years 2021 and 2020, so a comparative opinion, the MD&A is actually required to have 3 years of information in it. So it talks, about going all the way back to 2019 through 2020, 2021. So that is on page, I think, 4 through 10 of the financial statements. Actually 4 through 11, sorry. And then when you get into pages 13, 14, 15, those are the statements of net position. The statement, so revenues, expenses, and cash flows of the entity. So that goes through, again, 2020, 2021, so you kind of look at the significant changes from year to year there. And then after that is the notes to the financial statements. And the notes to the financial statements are still part of the basic financial statements, which our audit opinion covers. And that sort of identifies any significant balance sheet items or revenue or expenditure items. It goes through in a little more detail. So, for instance, capital assets kind of talks about the change from 2020 to 2021 in terms of additions, depreciation, changes in accumulated depreciation, that sort of thing. It also talks about changes in long-term debt. And there's some significant notes on pension activity as well as other post-employment benefits. In terms of pension and other post-employment benefits, we're also required to include a couple schedules called required supplementary information. Those start on page 51, and they give a little bit longer historical analysis on the changes in both of those liabilities from year to year. So you can kind of look at those two if you want from a historical perspective. There's also supplemental and other information included within the report, which gives kind of a 10-year analysis of the activities of the electric utility. So you can kind of see trend analysis from year to year there too as well. And then as you get towards the end of the report, one thing that we're required to provide in a public document is our report on meeting government auditing standards. They call this our yellow book report. So we give a report which says we reviewed internal controls over financial reporting from a high level as part of our planning procedures, and then any control deficiencies that we identified to be significant deficiencies or material weaknesses, we would communicate as part of that report. But we did have one item to report, and I'll jump into that in just a little bit here. But first off, I was going to jump into the financial results just a little bit. I know I've provided a handout that kind of gives a 3-year analysis of both the communications utilities and the electric utilities. As you can see, the changes in net position for the electric utilities have been very consistent from year to year. You kind of have that consistency built into the rate structure of the entity. The communications utility, if you look at the net change in net position of that, you can kind of see it's moving in the right direction. From a loss in 2019 to a small change, positive net change in position in 2020, to a little bit to gaining a little more ground in 2021 as well. And then one other thing I want to bring up too was the advance to and from the Waverly communications utilities. So we do perform certain procedures as part of our audit to ensure there's no subsidy going from the electric utility to the communications utility as required by the Code of Iowa. So we kind of look at that subsidy from year to year, as well as certain expenditures which take place and are both administrative and general expenses, which could be expenses of the electric utility or communications utility, and make sure that those are appropriately documented and recorded within both. So you kind of see the change for the advance to Waverly communications utility has been pretty consistent from year to year over the past 3 years. Any questions so far?
I don't think so.
Okay, you guys can still hear me, right?
Yep.
You're good.
Okay. The one thing you'll note on, if you look at page 37 for the net position effect of pension reporting this year, as part of booking the IFRS liability, generally some of the accounting principles within the past 5 or 6 years has said, anybody that contributes to a cost-sharing, multiple employer pension plan has to sort of identify that liability on their own books since they're contributing to the plan. One thing that happened within the last year is IFRS system-wide became actually fully funded based upon some investment gains in 2020. And so that liability for Waverly Electric and Waverly Communications has gone down quite a bit. So there's a lot less of a liability there. But again, that liability can fluctuate from year to year very significantly just with the change in investment differences from year to year there too. So other post-employment benefits reporting, OPEB, you can also see, that is pretty consistent from year to year. So that's the entity's analysis of any liability they might have for keeping retirees on their health insurance plan after they retired from Waverly Utilities. You can see that's pretty consistent between both entities too. And then one other thing to note was just the increased cash flow considerations for Waverly Communications Utilities as well. So again, going in the right direction there. I'll just cover the audit results very, very briefly. As I was saying before, within our government auditing standards letter, we're required to report any sort of material weaknesses or significant deficiencies. So to give you a little bit of background about those, material weakness is anything that could be considered to have a material impact on the financial statements in terms of changes or adjustments. A significant deficiency is less in scope than a material weakness, yet important enough to sort of identify to the readers of the financial statements or those charged with governance, the board in this case. So a little more open definition than a material weakness. So as part of our results of the audit, we did not have any material weaknesses to identify, which is consistent with prior years. We did have one proposed audit adjustment this year. It was a very small adjustment within communications for an accounts payable item. So not material by any means, but significant enough that we have to go through an internal control sort of evaluation process and report that deficiency as part of our government auditing standards internal control review. So that is included as a significant deficiency within the financial statements as well. Again, the wording there isn't our choice. I do not believe this to be something that's very significant, but auditing standards require us to evaluate that deficiency to see if it should be labeled as a significant deficiency. And since the overall thresholds of the communications utility is pretty small yet, since it's, you're within 5, 6, 7 years of inception, any small adjustments, we kind of have to go through that process. So again, I don't think it's significant, but it is unfortunately something we have to communicate through that letter. Is there any questions on that? No, like I said, I'd like to.
Could you just elaborate a little bit more for the public? Kind of drill down a little bit and tell us what that was exactly.
Could you hear that?
Probably not.
No, sorry.
Okay, he's asking if you could elaborate on that deficiency a little more for the public to understand.
Okay. Yep, I can do that. So as part of our audit procedures, we're looking at all the different account balances, transaction classes of the utilities. So one of the account balances that that the utilities kind of makes entries for at the end of every year or end of every month is accounts payable. And they're doing that based off of their standard processes and procedures. When we review accounts payable at year end, we're reviewing to see what has all been incurred as an expenditure by the utility, but not paid for as of December 31st. So there was one invoice that came in, I believe it was in February or March, I can't remember the exact date, that needed to be accrued back to December 31st. So it's a very difficult thing to catch as part of financial statement preparation because your turnaround time is very short. You're trying to do your accruals on a monthly basis, but if the invoice doesn't come in for a month and a half or 2 months, it's very difficult to know that. As part of our audit, we did catch that and address that with management, and they decided we can go back and make this entry and adjust the financial statements. Again, it's not material. It is something that does happen, but it is something that we have to sort of address and include as part of our letter. I don't know if that answers the question.
Yes.
Okay. Great. And those are somewhat typical across the audit industry too. So nothing from your standpoint that I would necessarily be concerned about. It was just one of those items that the invoice came in late. It's really tough to project out that would have been a liability until you kind of come across it. So,
I mean, just to put it in context, Brad. Can you hear me? Can you hear me, Brad? No.
I don't think he can hear.
Oh, okay. I was just going to say that it's $25,000 of accounts payable expense out of 3.4 million expense during the year, so it's a fairly small number.
Our board chair was just commenting that the amount, 25,000, was very small compared to the total amount for the year.
It is. I would 100% concur with that. It's a very small dollar amount, so nothing to be too concerned about. From our standpoint, we have to set sort of a threshold. Usually that threshold is usually about 1% of your total assets, total revenues or expenditures. And then sort of anything that's over that could be considered material. Anything that's a little bit less than that, we sort of have to address to see if it could become material and then go through that whole process as well. So I would agree, a very, very small dollar amount. Any other questions there?
Ask them how we're compared to other utilities.
How are we compared to other utilities?
In terms of
Financial soundness.
Financial soundness.
So that's probably a completely separate, discussion. Separate from an audit, you're probably looking at it from more of a financing perspective. We're very qualified to give an opinion on whether the financial statements are presented accurately and include all of the required disclosures. My opinion in terms of whether or not the financial viability of the entity going forward is positive or negative is probably a lot less significant, and I would hate to sort of to give any opinion on that because it probably wouldn't mean as much. Now, I mean, that being said, we have not seen any long-term issues that we can identify. As part of our audit, we actually have to go through a process to make sure that there's no going concern issues for either entity, so that either entity has the ability to sort of exist for the upcoming year and meet all of their required payments and liabilities and anything of that nature. From that perspective, we have no issues. Just from, I guess, an off-the-cuff opinion, I don't see any, I don't see any long-term issues that I can see. Any other questions there?
I don't think so.
Okay, great. I was also just going to point out that we always, as part of our audit, we go through several statutory items too. and we're required to report any items or any findings in that area as well. So those start on the bottom of page 62. There were no findings in any of those areas at all. I think there's about 9 different areas we're required to report on, as well as audit several other areas that are not part of this report. But there were no findings, no issues in that area of the audit there either. So, and then I think one other thing I was bring up is the accounting pronouncement that will be effective for next fiscal year will be GASB 87, which is a new leasing standard, accounting standard. So it's sort of eliminating the old classifications for leases in terms of operating lease versus capital lease, and it's moving to sort of redefine what a lease is, and then to sort of include more leases on the balance sheet of the entity. So any sort of leasing agreement that would be more than 1 year for any right of use asset, we would have to sort of address whether or not it meets the lease thresholds, or the definition of a lease, I should say, and then sort of address those as part of the audit next year too. So I think that's something that could be significant to a lot of different entities. I know talking with management in the past, they kind of had a plan to sort of address those, and I think at least I feel like they're probably in a pretty good spot to address that for next year. But that could be something that's potentially significant from an audit perspective next year too.
Could you
I do have our contact. I'm sorry, go ahead.
I have our board chair asking a question. Hold on a sec.
Could you ask Brad, about that? I mean, so for example, for the communication utility has a lease agreement with the electric utility. I mean, will that require some kind of a significant additional liability to show up on the communication utilities?
He's asking about the lease that the communications utility has with the electric utility, and will that change the liability?
So it could change the liability, but with this standard, and this will probably make you scratch your head a little bit, anytime you lease an asset, so if you have a lease liability, you'll also have an offsetting right of use asset. So if they're leasing an asset for $50,000, they'd also have, not only would they have a $50,000 liability, but they could have a $50,000 asset as well, which sort of offsets the net position effect of that. There's a little bit of difference there, there could be a difference there between the asset and the liability in terms of, present value. But for the most part, the asset should sort of offset the liability too.
Thank you.
Okay. Great, and then our contact information is listed there at the bottom. If anybody has any questions, feel free to reach out. With any questions?
Any other questions? I don't think so. Thank you, Brad.
Thanks, Brad.
All right, thank you.
All right, so entertain motion second to accept the financial audit as presented.
So moved. Second.
Any discussion on that? Hearing none, all those in favor, say aye.
Aye.
Opposed? Okay, the audit is accepted. Resolution 16-22, corporate authorization resolution for the CUSB Bank. Angie.
We have one for CUSB and one for First Bank. This is just to get Kelly added on as a signer.
All right. So entertain motion second to approve resolution 16-22 as described.
So moved. Second.
Any questions? Angie?
Kettleson,
Yes.
Frederick,
Yes.
Brookhorst,
Aye.
Buckingham,
Yes.
Faber.
Yes.
Resolution 16-22 is approved. Resolution 17-22, entertain motion second.
So moved. Second.
No discussion. Angie, please call roll.
Kettleson,
Yes.
Frederick,
Yes.
Brunkhorst.
Aye.
Buckingham.
Yes.
Favor.
Yes.
Okay, resolution 17-22 is approved. Information items, anything? Nothing on the agenda, anything?
Yeah, I'll just give a board a quick update on the solar agreements and how they're progressing. I won't go into detail until we get further down the road, but our attorneys are working on 4 agreements with us. One's the PPA, one is the land lease from the seller of the energy. We're working on an interconnect agreement.
One more
Absolutely.
resolution. Did we go through 3 already? I have 3 on here.
It's like 1722 and 1722, is that together?
I think
16 and 17.
16 and
were
17.
together.
What?
Is it wrong on there?
Oh, yeah, it's different on,
Yeah, online we have the
on the
communication.
agenda manager.
You have a communication one too.
Oh, no, there shouldn't be one.
Okay. Because that was a different form.
Yeah. I don't have anything, well, there's 2 under First Bank probably. But
Okay.
they're both under 1722.
I see.
Yeah, 2 different accounts, the communications and the,
I'm sorry.
sorry.
Yeah, it's a little different on the screen, so it's confusing a little bit.
Sorry about that.
No, it's quite all right.
Good question, Bob.
Okay. Continue on with the update on the solar garden. So there's 4 contracts that we're working on. Purchase power agreement, the land lease, the interconnect agreement into our system, and then an operating and maintenance agreement on that solar field. So even though it's taken quite a bit of time, I think this is the first time they've worked in Iowa as far as the Sand Hills Energy Corporation out of Nebraska. So they're doing a little bit of update on what's Iowa law. And then we're tying all these things together. It looks like they're a smaller entity that used to do these one-offs. But our attorneys are saying, hey, these are all interconnected, so we're going to make these all meet and tie back to the same thing. So we've got those 4 things in place. Kurt's working on some estimates to get the interconnect distribution lines so we can get those tied in. We're looking at what is our outlay of money to put into the agreements to say, if you back away, we've got this money invested and we want reimbursement if they back away. So we're working on that. And then, of course, we're started the land purchase agreement, which needs to be tied to these other 4 agreements getting approved. So it's a little bit complex, but yet our attorneys are saying that Sand Hills is still very willing to work with us. They're accepting a lot of the changes and making a lot of discussions. So it's moving forward, just slower than I would like, but it's moving.
Just a question, I mean, do you think in another month we'll have something to look at, or is it hard to predict?
I think it would be hard to predict. I would hope within 60 days we would have something to at least bring Nadel in and give the board a full update, maybe in a closed session type setting or something, see how close we are to sign on the line. Because there was a few items that we've been back and forth on. So I think what I can share is that we'd look at the fixed cost, and they gave us 2 options. One was a fixed cost, and the other was a 0.5% escalator each year. And that's kind of been pulled off the table by them based on the economic conditions that we're currently in. So we had some other discussions on the length of the lease, and we threw that back in as a negotiation topic. If you want to go to this 35-year period, then we want that fixed and see what their answer is. So we're kind of doing a little bit of that too to see where they're at. So it's taking longer. Hopefully within 60 days, they'd like to get started on this, and have it done by next year, at least by the end of next year, 2023. So.
Just for the board's information, I sat in on one, I know you've had several, but I sat on one where our attorney had a list of issues, not huge issues necessarily, but a whole list with, 1 or 2 of the agreements. with Sandhill. And just my comment on it is thorough. I mean, our attorney is being very, very, very thorough, I think, so I think we should feel good about that. So.
Now, I know when they presented to us, about 6 months ago, they said, they source most stuff in America, but right now, solar has been really hard hit because of supply chain issues. Are they still saying that they don't have those issues? Or are they saying that could be delayed construction?
Yeah, they're still saying that their panels, so there's a tariff issue with the Southeast Asia panels, and those aren't the panels they're using. Theirs are made in the United States, so that is not an issue for them. It's just the cost of everything else that's going on.
Okay. So the people of Waverly should hopefully could see some construction on some type of field later this year? Is that what you're thinking?
Kurt, are they saying start construction this year or next year?
It'd be next year.
Yeah.
And it's probably about an 18-month construction window, so it'd be probably middle of 24 by the time it'd be done.
So one of their agreements said that they would, the prices included with the land meeting our inspection. We said, no. You go inspect the land first. So we know there's no surprises that, you don't like the land. So those are some things we're negotiating. You guys go look at the land. We're not going to have you go look at the land after we purchase the land. And then you say, it's not suitable. You got to make all these repairs to the land. We said, no, you tell us now if that land's suitable so we know up front. So we're dealing with those things. But we've started. I think we did some survey work on the property, so things are in motion. Again, just kind of moving like molasses, in my mind, but we're moving. Interconnect agreement was just created, and they're just creating an O&M agreement, so we're getting there.
Very good. Thanks, Joe.
And Angie, did you want to talk about guest trustees during information items?
I've contacted several people. We have the lady that was interested in being on the board.
Jackie.
Hanson?
Jackie Hanson is going to be on fourth quarter of this year.
Very good.
Awesome.
Lisa Peterson will be on early next year, probably first quarter of next year. I'm still waiting to hear back from Phil Jones and Ryan Rasmussen. Are the other two I contacted at this point. Do you have any other names you would like? I mean, I had asked you guys from this list and nobody had any additions.
So I would add Diedrich Dranko to that list. I believe he has filled out an application for interest in serving, and so based on that, and Andrew Kaler, Kahler.
Andrew? Mm-hmm. And who's he with?
He's with Denver Insurance Agency. He's a Waverly resident.
He's on the library board.
Okay.
And
The only question about Dietrich is, did he already be a guest? He was already a guest once, wasn't he?
oh, maybe he was.
I don't have
He's so
that
memorable.
right here.
Sorry,
It's
Diedrich.
been on.
Sorry,
He was
Diedrich.
memorable for me.
Sorry.
I thought he did an outstanding job. Just to let you know.
Jet engine engineer, NASA.
He's yeah.
Yep, Diedrich's been on it.
Well, then, never mind.
But also for the public that's watching, if they would like to be, I mean, they can just contact Angie too. So if anybody's interested from the public, we'd like to re-kick that program up.
Absolutely, yeah.
So I am working on it.
Good.
Trying to get people, so.
Very good. No, the names you had and, the progress you're making sounds good, so.
I have some other names, on here, I just haven't tried them yet. So, but if you have anybody you can think of right away that you'd like me to contact, please let me know.
Any other business? Okay, we'll move on to the calendar. Anything of note? We should be,
Next month, we will move to that Monday, June 13th. I had a quorum, enough people could come, so that will be moved to the 13th.
all right. Very good. Moving on to the electric utility action items. Resolution 18-22, reimbursement resolution. Darrell, you mentioned we need to do that one separate.
Yep, because it takes a roll call.
And you can see that online. $144,000 this past month. Mostly Louisa generation.
Oh, why is that?
Louisa. Entertained motion second to approve resolution 18-22.
The only thing I would say is it does still say Casey's name at the top.
Ah,
Oh, it does?
Yeah.
Okay.
I'll make a motion though.
very good.
Second.
No discussion. Angie?
Evelson,
Yes.
Brunkhorst,
Aye.
Frederick,
Yes.
Buckingham,
Yes.
Favor.
Yes.
All right, resolution 18-22 is approved. Now information items, several here. The cash transfer to the city of Waverly.
Yes, you'll have a proposal in front of you. That information that we calculate is based on the 2021 electric sales, but it doesn't take effect until Waverly Utilities calendar year 2023. The mill rate, as suggested, is 3.4, which is the same as prior years. The total proposal is a transfer of $734,157, which is $27,000 higher than the prior year. That's due to a bit of an increase in electric sales. I'd also like to note that the Wartburg Wellness Center transfer, the normal $125,000 per year, that ended with the January of 22 payment.
Okay.
So this is in line from previous years, Darrell, right?
Correct. Yep, same
About-
formula.
About $700,000 transfer to the city.
This would be a
Total.
good one for some background information, maybe, how Bob,
Yeah.
for people watching.
Yes, absolutely. As you know, there's a rate formula that was established by the board many years ago on kilowatt hour sales. Less the municipal sales, less the street lights, so net energy sales, 132 million kilowatt hours. And then the mill rate that the city gets paid as compensation for ownership of the electric utility. The mill rate set at 3.4, so that equates $449,000 that gets paid in lieu of taxes, because we don't pay property taxes per se or other taxes, so it's considered a payment in lieu of taxes. We add back, what we contributed in the street lights of $263,000. What we contributed for city parks and traffic signals, $21,757,000 in energy usage, comes up to a total transfer of $734,157, back to the city of Waverly as our payment in lieu of taxes. This is equivalent of 4.9% of our customers' revenues. And for comparison purposes, investor-owned utilities typically pay around 2.5% of their revenues in taxes to other cities. So it's still a nice transfer back to the city of Waverly.
This is for the year 2023, so this is information at this point. So,
We bring it back next month for approval.
okay.
And And we do it like this so that the city can budget. Their budget year runs from July 1st to June 30th. So by doing it now, we can let the city know, hey, here's what you can expect for revenue if our kilowatt hours are the same or close to these kilowatt hours.
Yeah, so this is sort of a separate piece from our regular annual budgeting process. It follows, ours follows the calendar year.
Correct.
Would it be any advantage to just pay the tax? City tax,
You can't.
property tax?
We're not subject to the tax.
I know, but
Well, I mean, every utility, I mean, we could devise a formula that would pay that tax, but this is the formula that we've used, which is somewhat comparable to other public utilities, as I understand it.
well, I guess what I'm suggesting, if we only pay at 2.9%, is that what some utility annually? Okay, so if we come up with, we're going to pay you 2.9, then we lower our rate, we could lower our rates, or
Yeah, I think if you look at that 449,000, if you went from 3.4 to 2.9, you would, decrease it $50,000, perhaps without running the numbers, just a quick notice. I think if you can justify it, that you want to drop it like that for whatever reason.
Kurt, did you review the mill rate a couple of years ago? Have we discussed, I feel like we've discussed that at length at some point in the,
We've had presentations on it already.
Okay.
You gotta come in. No, I didn't do it.
No, it was finance,
It's
I think,
finance
that,
part, so. But, yeah, Dave Burke,
No, we've reached out to the other municipals in Iowa and said, what are you guys paying for pilot fees? And it seems like every city has a different calculation, a different what's included, what's not included. So every community seems to have their own specific way of calculating their pilot fees. So there's no, this is the right mill rate or anything like that. It just doesn't exist. Everybody's unique and different.
so this is just a non-tax, non-property tax, so to speak.
In lieu of taxes.
Right. So you're getting it one way or the other, the city is.
Except we add on the city streets, the city lights and the city parks, and traffic signals as an add-on above and beyond the mill rate as a municipal utility nice gesture. And that's typical. Other utilities do the same thing.
Yeah, and again, that's all over the board. Some forgive everything to the city, and others don't forgive anything to the city, and then we're kind of a little bit of both.
Other questions? All right. Information for next month. We've already talked solar agreement, so monthly department reports. Go to Kelly.
So the customer service staff continues to perform the day-to-day functions of the billing and collection and the setting up and the closing of accounts. We've, as you know, we've worked with the Waverly staff to complete the audit, so that was presented today. I've also been working on the attachment O for
Yeah, Kelly, you don't have a microphone. Should you be at a place where they,
podium?
a podium live?
The lights.
normally you would have one that sits on the table. Would you like me to start over?
Yeah, maybe where there's a live microphone.
Does this work? No? I can sit by Angie.
I don't have one here.
Can you hear me now? No.
seat, get comfortable.
Thank you.
You want to introduce yourself?
Hello, I'm Kelly Meyer, the Director of Finance and Customer Service. I'm new to the position and glad to be here. So the customer service staff continues to perform the day-to-day functions of billing and collections, including the setting up and closing of accounts. The staff and I have worked with Ide Bailey in completing the audit, which was presented earlier today. We've also completed the Attachment O, which is a filing requirement for MISO. The next steps for me would be to continue to meet with my team and start to learn the processes that are involved in the finance.
Any questions for Kelly? Thank you. Jan, we're going to have, each of you are going to get a little exercise here.
It's on the screen. It's on this screen here.
I don't have it memorized. I need my paper.
This is really low.
For the communications side of the electric, we focused on the hydro decommissioning, so that is coming up this summer. We will start the construction of that probably June 1st. So this coming Saturday is when we will do the tours of the hydro, if anybody would like to come see that. It'll be in conjunction with the plant sale that's going on in the same building. So it's kind of a way for people to stop and do two things at once and come out and shop the sale and then also do a tour of the hydro, and that's from 8 until 11 this Saturday. So getting ready for that, we had a lot of meetings. We have a display set up in the historical museum downtown, so it has some of the pictures, some of the past articles that we did in there. Some things were way too heavy to put in the display, so we weren't able to do that. Articles in the newspaper, brochures were reprinted just so that if anybody shows up and wants a little bit more information on it, they can have that on Saturday to read over and review. Again, tours that'll take place. So working a lot on that this month. For the electric side, we promoted the Call 811 Before You Dig. That is April is the month that the electric side of things pick for that notification when people start to do spring projects, their buildings. So we like to notify our customers and remind them that it is the law. They need to call 811 before they dig for anything. It was also National Lineman Appreciation Day, so we just did a quick shout out to the linemen of our crew that, appreciating them and all that they do for our community and the reliability that they keep for us at Waverly Utilities. I also worked on several media releases. So Mean has their spring rebates. This is something that we partner with Mean, and it's just an additional rebates that our customers can apply for through Mean that we don't offer here. So it's kind of a team project where both Mean and us work on these rebates for our customers, and they work directly through them with the paperwork. And then also we had some exciting news with the 3 awards that we won from APPA. There was the Excellence in Safe Operating Practices, the Excellence in Reliable Performance, and then the Arbor Day Foundation's Treeline USA. So those awards were presented to us this spring. And then just the social media posts that we have all the time that notify our customers of rebates, safety tips. This coming month, we'll be talking about a lot of the electrical safety tips because that's what they promote in May. So yeah, that's it.
Very good. Thank you, Jen. Kurt?
So in the last month, overhead and underground crews finished up a project in the 1st Street, 2nd Street Northwest area. It's a alley reconstruction project. That was a planned project that we've had for the last year or so to get that done prior to the city doing their work in that area of town. The crews then have also been on the Cedar River Parkway overhead to underground conversion project. Again, that's a planned project that I've been planning on for several years, is to get the overhead river crossing over behind the bike trail in Quick Start East, where it crosses the river there, to take that line down and then to get replaced to mostly underground anyway. It's an update for the distribution system on that project. Generation staff conducted a quarterly maintenance runs on engines 17 through 20. There are no deficiencies reported at that time. The engines operated. And then we also worked with Shermco Industries on the testing of the generators on engines 8 through 10, and no deficiencies reported on those engines with that testing being completed. Engine 7 had substantial work done in the last month. That generator's been completely disassembled and sent off for repair. Shermco Industries was on site for about a week and a half to get that work completed. As of right now, we are at the mercy of supply constraint issues, so we'll be hopefully have that engine generator back up and running hopefully by the end of the year, but we'll see.
They didn't take the whole engine, they just took
just the generator.
Just the generator, the front, that.
Yeah, substantially the generator is still there. The components, the winding inside of it have been disassembled, and most of it was sent off to the scrap pile, but it'll be rebuilt and sent back.
Now, Jen talked about the hydro tour. Have you guys done any work, or when will you start the work on removing the hydro?
So we've done a little, mostly house cleaning work this month in preparation for the tours and open to the public. And we'll be moving into a decommissioning setting after June 1st. So that'll be when the heavy work actually starts in that facility.
Good. So this will probably be the last time to see the hydros intact this next weekend.
Yep.
Okay. Great, thank you.
Okay, thank you.
All right, thanks, Kurt.
Just like to interject here, and sometimes I get confused. I thought when we talked about, I was going to talk about solar and other business, and I see it was listed down below under that other business, and Angie was going to talk about guest house trees there, so I got off track. But I do want to pass along some kudos to staff. With Casey's departure, Kelly coming on board, Kelly got the audit and the attachment O, which was two huge pieces to absorb, understand, get filed, how to learn how to file the attachment O in MISO. Not an easy task. She got that done. So that was her top priorities. Kudos for getting those done. And for the rest of the staff for help picking up the pace. Amber at the front, taking care of the customer service up front, but the rest of the management team, including Jeff, helped out in Telcom doing some reporting, making sure other reports were done. Everybody took a piece of that to help fill in, so thank you for that.
You brought Cheryl Bergman back for a month or two from retirement. So people retire and you're dragging them back to work. So we appreciate Cheryl too.
Yes, absolutely.
I was going to say, you made it sound surprising that Jeff would help.
We're not in the telecom section, so I still brought him in here.
All right. Let's see. So we move to communication utility action items. Nothing on the agenda. Information items. We go to department reports.
Step up to the microphone.
All right, Jeff.
Okay. So on the distribution side, outside plant, staff continue with installations. Quite a bit of focus is still out in that Rustic Hills development area, doing drop cutovers as over the winter. Some drops were temporary on the ground, trying to get those off as soon as possible, and then responding to service incidents. We met with a developer who's going to build approximately 25 apartments, just trying to get in there as early as possible to extend fiber to each unit. And then staff inspected the routes to New Hampton and then to Cedar Falls, just looking for any weather-related damage over the winter and or any wildlife damage. From a broadband services standpoint, there were I guess three industry events that staff attended. One was an IMU broadband spring conference, where it's just sharing of ideas, going over some of the best practices that municipals are doing. Calix, who is our fiber PON vendor, also had an event down in Coralville. same type of thing. They gave a roadmap of their products where we should be going from a capacity standpoint. And, fortunately, I think we're right on target for their recommendations, whatever that means. I don't think you want to take every recommendation to the letter from a contractor or a vendor, but I feel their approach is pretty sound, and we're following that closely. And then we had the IPTV owners meetings with the 5 or 6 owners, municipal owners. We did complete some filings, surprising as that may be. So we completed an inter-exchange company filing, and then also the 499Q, which is a universal service funding fee that we pay on phone service. So we do also have a new bulk video customer coming in probably in August, so it'll be about 22 residential tenants, or 22 units. And then we did have degraded service in Zone 2, which is primarily in the northwest part of town. April 21st and 22nd, we had some rogue fiber devices, customer devices that were flooding the network. So we were able to isolate and find that. It took a little bit longer. We're implementing some mitigating controls, and hopefully we won't see that again.
Any questions for Jeff? Thank you, Jeff.
Thanks.
We can just say ditto for Kelly.
Yeah, I think you've already kind of given us that report, so thank you. Jan.
So for the May campaign for the communication side of things, again, it was about the call 811 before you dig, a little bit of a different look, where this kind of a crazy guy is riding his lawnmower and reminding people when they're out there again doing their projects during the spring to remember to call and before they dig. We have started our prep work, and the chamber golf outing is this Thursday. So if you haven't signed up yet, Jeff's looking for some golfers if y'all want to golf with his team. Okay. But we will be on hole 1, and we find this as a really good event to support for our community and for the Chamber of Commerce with the businesses that we are involved with here in town. And I'll be there handing out sleeves of golf balls, and hopefully I'll have my new tent.
I fought for that last year.
I know. So I'm so excited. I don't know if it'll be here in time, though. And Kurt told me it was going to be windy, so we'll see how well it works. Jeff and I had a virtual meeting with Rave, which used to be called Swift Reach, and we used to have them several years ago on the electric side of things, where if there was an outage, we were able to communicate with our customers via text, email, or however they chose to be communicated with. They have changed their name now to Rave, but as we're noticing with more updates now that we've added telecom on, the only way really to communicate is via Facebook, and not everybody has that. So we want to come up with another option for our customers to be able to get these notifications, whether it's just an update overnight that's going to be running, or if it's an outage, and we can narrow it down to just the zone that they're in, so not everybody would see this message. If it was just more of a concentrated area, then people would get that message via whatever form that they would like to get it. They would be able to sign up for it and opt into it. We don't have everybody's email addresses and phone numbers that they would do that. So it will be a campaign that we would have our customers sign up for this service, and we hope that it will be a better way to communicate with our customers on the telecom side and electric too. I mean, we can use it on both ends. We just discontinued it originally because of our great reliability. We did not have very many outages, and we just didn't know if it was worth it at that time. But now that we have more communications that we have to do with our telecom side of customers, we think it would be a good product to have on our side.
Do we have a cost yet?
Yeah, sorry, and I don't have the quote in front of me. There's a startup first year cost, and I think it's approximately around $7,000, and then after that, it's like $4,500 a year. So it's not a real big, huge expense, but yet it's something that we really feel that our customers would benefit from as a new communication tool, because, like I said, we just don't always have everybody on Facebook, and unfortunately, outages don't always happen when I'm sitting in front of my computer. So for website updates, I have to be in front of my computer to do that, and this tool would allow it so I can do them from my phone or wherever it would happen to happen at.
So people would have a choice.
Yes, they would have the choice, and they could sign up, say they don't like it.
They have to sign up.
Yeah, they would sign up. If they don't like it, then they can opt out of it as well.
I think the text
Yes.
would be very good. And I've heard that comment before. It'd be nice to have that kind of communication.
So we're working on that with that company. You know.
I get it. I get one up at our light place, and unfortunately, that utility, I probably get one about once a month. Or maybe twice a month, but us, I think we're so reliable.
Right, right. And like I said, you know, some of these updates, it just might be zone 2. Well, if you're not living in zone 2, you won't have to get that update, you know. So we can narrow it down to communicate more efficiently with our customers and get those messages out to them. And we would continue to still do Facebook and website, but this is just a better way to do that.
It's kind of a component of our strategic plan as well. So we built the plan and we're looking at these things to see how we can meet it going forward. So that's just one cog of that strategic looking forward plan. So, thanks, Jen.
Yep.
All right. Ready for closed session. So per Iowa Code 22.7, confidential competitive information, entertain motion second to go in closed session.
So moved. Second.
Angie, please call roll.
Frederick,
Yes.
Adelson,
Yes.
Buckingham,
Yes.
Weaver,
Yes.
Drumforce.
Aye.